cash reserve is so vital to your financial well-being for a number of reasons. Firstly, so that you can afford to meet costs that you weren't anticipating. Let's say your car broke down, or your boiler went wrong, or something happened that you needed to pay up for that you hadn't anticipated. If you haven't got a cash reserve, then you're going to end up getting in debt and overdrafts and credit cards, which we know is bad debt. The other reason is because if you lose your job and therefore your income, whether that's because you got made redundant or because you were ill for a period of time, then, or perhaps you've lost your hours because your firm hasn't got as much work for you, then it's important to have a reserve that you can draw on to sort of supplement your income to meet your expenses as they fall due. And one of the single biggest reasons why people get into debt is because they have had a change in their employment or their income for some means. There's no magic to building a cash reserve. It's pretty straightforward. You have to save money out of your income and put it aside into an account which is accessible. So not a stocks and shares ISA or a pension or any other home. It has to be in an account that you can get your hands on. So it won't have a very high interest rate, but you can get your hands on it. But it's only for emergencies. The second thing is, as a rough rule of thumb, you should look to save between 3 to 12 times your monthly core expenses. So not all the extras, holidays and what have you, but just the core expenses. And you need to save more if you are very reliant on your income and less if you're less reliant. So for instance, your firm may have a special, have to pay you 12 months money if they make you redundant, or you may well have income from a property coming in that won't stop if you stop work. So everyone's different, but it's somewhere between 3 to 12 months expenditure. Your financial well-being is really affected by your ability to cope with a financial shock. And one of the biggest financial shocks is if you can't earn your money because you're ill or you're disabled, or you die and it affects your family. Now, obviously, if you're young and single and you have no dependents, it's not a big issue if you die. But it is a big issue if you have dependents. So what we're talking about there in order of importance are protecting your income in the event that you can't work due to illness or disability. Many employers provide this, but many don't. And if you're self-employed, you will definitely need to get some cover. Then you'll be looking at life assurance, paying out if you die, either a lump sum or in instalments. Then, depending on the health situation where you are, perhaps private health insurance might help you get quicker treatment on some of the less life-threatening illnesses, but nevertheless things that might stop you from working. And then finally, a sort of, if you really nice to have, is critical illness insurance, which pays out if you get diagnosed with one of these terrible critical illnesses or paralysed. But if you're still working and therefore have not achieved financial independence, whether you've got dependents or not, the single most important insurance that you need to effect for you personally is income protection insurance. This means that an insurance company takes over and pays you a proportion of your pre-disability income for as long as you're ill, up to and including your retirement age, which could be 60, 65, or indeed even 70. That is the single most important insurance. So check if your employer's got it. Even if they've got it, is it enough? And if you're self-employed, you definitely need it. It's absolutely right that you can be overinsured. You can be overinsured for lots of things. But here's the sad reality. I was an advisor for 25 years and I found people were more overinsured on their home contents and their mobile phone and all the other rubbish, and they were underinsured on their life, their disability, their income, etc. So I'm yet to see a situation where there's an enormous number of people who are overinsured. The most important thing is to work out what the risk is, because it may be low probability, but it's a very high impact event if you lose your income due to illness or disability.